Coming to 705, which is a revised standard, and it relates to modifications in the audit report. I keep on citing the word modification in the audit report. Very loosely we use the word qualification at times. As mentioned earlier, qualification is one kind of modification. There are three different types of modification. One could be a qualified report, one could be a disclaimer of opinion, and one could be an adverse opinion. The decision for the modified opinion or not a clean opinion will depend upon the nature of the matter, whether that particular matter materially misstates the financial statements, the inability of the auditor to obtain sufficient and appropriate audit evidence, and also the auditor's judgment about the pervasiveness of the matter, which means that is the matter so large enough that the auditor will not be able to conclude upon the negative effects that it would have on the financial statements of the company. If you look at the right hand side, there is a matrix, and let me run you through this particular matrix. You have the very first column which talks about the nature of the matter, and then you have got the second column which has got two sub-columns. The second column talks about what would be the judgment of the auditor about the pervasiveness of the effects or the possible effects on the financial statements. Let's take the first scenario. In the first scenario, the financial statements are materially misstated. So the auditor has concluded the financial statements are materially misstated. There is an error, or there could be a misstatement which is materially impacting the financial statements. However, if the auditor is in a position to conclude that the impact is material but not pervasive, which means that there is not an unlimited distortion of the profits or the assets of the enterprise, then in that case, the auditor would think of giving a qualified opinion, which means that except for the effects of the matter as laid earlier, the financial statements will give a true and fair way. Subject to that, that means. Let's go to the one next to that, where the financial statements are materially misstated, and the auditor has been provided all the information, and the impact on account of such misstatements, as determined by the auditor, has been material and has been pervasive, which means that the auditor believes that having received all the information, the impact is very material and it can have a pervasive effect on the financial statements, then the auditor will have no alternative than to give an adverse opinion. Let's come now to the second scenario. In the first scenario, we presume that the auditor has all the information. In the second scenario now, auditor is unable or having an inability to obtain sufficient appropriate audit evidence, which means that the auditor has not got sufficient information to conclude on the audit. However, having assessed the entire situation, if the auditor believes that the impact is material but not pervasive, he is aware that yes, on account of the inability to obtain information, there is a material impact, but it doesn't really distort infinitely the results of the enterprise, or it distorts the assets significantly, as a result of which he will come to the conclusion that he would be giving a qualified opinion to the financial statements in the audit report. Second scenario, even if the auditor does not have enough information or is unable to obtain sufficient and appropriate audit evidence, and he believes, having assessed the entire situation, that the impact is going to be material and pervasive, then the auditor will have no option but to disclaim an opinion. You look at it very factually and look at it from an auditor's perspective. He does not have enough information, and he believes that if he does not have this information, the impact would not only be material but will distort significantly the entire financial reporting, and therefore he will have no option but to give a disclaimer of opinion. If at all we have understood this, this would be the basis of the auditor's opinion insofar as a modified opinion is concerned. So I discussed about this in the earlier slide. This particular slide will talk about the deciding factors for the modified opinion, depending upon the nature of matter, which would be whether materially misstated and related thereto, inability to obtain sufficient and appropriate audit evidence, and finally pervasive effects. We touched upon it in the earlier slide. 705 revised also talk about management imposed limitations. Many a times, management may not want to share sufficient information with the auditors. Many a times, management may not have adequate information to provide to the auditors, and therefore auditors will be unable to obtain sufficient and appropriate audit evidence to conclude on the financial statements. And therefore the auditor at this point of time should really evaluate the need to express a qualified opinion or to disclaim. Because in the case of inability to obtain sufficient information, the auditor will either give a qualified opinion or will give a disclaimer of opinion. However, it's important that the auditor should just not on his own give the opinion, a modified opinion in the audit report. The auditor should actually evaluate as to what should be done. So already having discussed it with the management, the auditor should actually raise this particular matter with those charged with governance, which means the audit committee and the board. And he should be in a position to impress upon them that this particular audit opinion will not work. And therefore, in the interest of the management and in the interest of the company, all the information should be provided so that the auditor will be able to conclude. However, at many a times, it may not be possible for the auditor to obtain all the sufficient and appropriate audit evidence, and therefore the auditor will be required to see whether there are any alternate procedures or alternate information that can be extracted from the management, and thereby he would be in a position to conclude or not to conclude. If the auditor, having asked for alternate information or having carried out alternate procedures, is in a position to reasonably conclude that everything is fine, then in that case the auditor will give a clean opinion or an unmodified opinion. Having received alternate information and alternate procedures being carried out, if the auditor is not in a position to conclude and the impact of that would be material, then the auditor will give a qualified opinion, and if the impact is going to be material and pervasive, then the auditor will give a disclaimer of opinion. However, before giving a disclaimer of opinion, as I mentioned earlier, the auditor should discuss with the management and those charged with governance, and initially, as per the standard, the auditor should consider to withdraw from the audit where practicable and possible under the applicable laws and regulations. Many a times at the PSUs, the auditor will not be allowed to or will not be given the permission to resign from the audit or withdraw from the audit, and therefore under such circumstances, the auditor will have to give an opinion, and that opinion could be a disclaimer of opinion, and having given that opinion later, he can withdraw from the audit. We've touched upon this particular slide. I have discussed about this in the earlier slides as well. Auditor's responsibilities under 705. However, you should be aware that whenever the auditor is going to give a disclaimer of opinion, the description of the auditor's responsibilities in the auditor's report needs a modification out there. And therefore, if the auditor is disclaiming an opinion on the financial statements on account of the inability to obtain sufficient and appropriate audit evidence, then there shall be an amendment to the description of the auditor's responsibility, and those amendments will only include the following. The auditor should just say out there that he has conducted the audit of the entity's financial statements in accordance with the standards on auditing. And again, a statement has to come out there as well that because of the matters which are referred or described in the basis for opinion paragraph, the auditor was not in a position to obtain sufficient and appropriate audit evidence to form a basis for an opinion. And the third thing that should be there in the disclaimer of opinion audit report should be about the auditor's independence and the other ethical responsibilities. In short, what I'm communicating over here is that once you disclaim on the financial statements, once you disclaim an opinion on the financial statements, in that particular case, very simple, one should only talk about what auditors have done and should not be providing any kind of an opinion, because opinion is disclaimed by itself. Let me come to the last standard, which is standard 706 revised, which is now going to talk about the emphasis of matter and the other matter. Many years ago, when we did not have very clear-cut standards on reporting, at that point of time, people would sort of, dilute the opinion by even considering any important matter which would really have a significant impact on the financial results of the enterprise or on the state of affairs as at the year end, by calling it as a matter for attention. And they would normally sort of give that particular point, although that point could be a qualification. We have seen this in the past. However, there is enough guidance now through this particular audit standard that what should be a key audit matter, what should be a modification, under what circumstances you will be giving a qualification, under what circumstances you will be giving a disclaimer, under what circumstances you will be giving an adverse opinion. But this particular standard talks about emphasis of matter on a given point, which is already being reflected in the notes to accounts or anywhere else in the financial statements. The point over here is that if there is an important matter being disclosed by the management in the financial statements, and if the auditor believes that it is of such importance that it is fundamental to the user's understanding of the financial statements, then in that case the auditor will consider bringing this point out in the auditor's report itself by calling it as an emphasis of matter, and this will be disclosed in the audit report. If you look at the second point, it says very clearly, and that's what I have mentioned earlier as well, that an emphasis of matter is not a substitute for a modified opinion. Whatever is required to be qualified or modified should be done that way. A qualification should not be diluted into an emphasis of matter. And however, the other clarification over here is that this particular matter is not a key audit matter to be communicated in the audit report. For the key audit matter, there is a very clear standard on 701 as to what constitutes a key audit matter, and therefore it should not be mixed up with the para of emphasis. Key audit matter is an audit matter, whereas an emphasis of matter is something which the management has already presented in the financial statements, in the notes to accounts, which the auditor would like to focus and emphasize upon. The next thing, which is a part of this particular standard, is the other matter. And this particular other matter is something that the auditor would like to bring it out in the audit report, but which is not there anywhere in the financial statements, which in the auditor's judgment is important and relevant to the understanding of the auditor's report to the users, and also the understanding of the auditor's responsibilities or the audit report. Again, as I mentioned earlier, this matter is one which is generally not a key audit matter, because a key audit matter is something which is different, and therefore anything to do, for example, if the auditor would like to talk a little bit about the planning and the scoping matters, then it can be a part, it can be forming part of the other matter as well. Some of the key takeaways as far as these standards are concerned: the responsibility of the auditor is to form an opinion on the financial statements of the enterprise based upon evaluations of conclusions drawn from the audit evidence, and to ensure that appropriate documentation has been provided to the auditors, appropriate documents have been provided to the auditors, and all the conclusions have been reached. The auditor has to also ensure that he has obtained reasonable assurance as to whether the financial statements are completely free from the material misstatements which are being caused either by error or by fraud. Auditor has also gone through all the consultations as required within the firm for any modifications to the audit report, because it's important that whenever there are modifications to the audit report, he should consult depending upon the kind of engagement. In the case of listed companies, there is always a concurring reviewer or a second partner review being required, and therefore these matters should be adequately consulted. Documentation of such consultations should also be forming part of the work papers. Auditor also include an emphasis of matter paragraph in the auditor's report to draw the attention of the users on matters being presented or disclosed in the financial statements, and refer that particular point in that emphasis of matter paragraph. Obtaining management representations is very, very important before the audit report is signed, and the management representations have to be before the audit report is being placed to the board of directors. And finally, standard on quality control 1 on matters relating to quality needs to be ensured as well. So with this, I think we are a fairly good understanding now about the different kinds of audit reports which can be issued under the new standards. As I repeat, 700, 705 and 706 are the 3 important standards which are the revised standards and which would be applicable from 1st April 2018 for the very first time for the audit season or the audit finalization, which now begins in the months of April, May, June, etc. And you need to ensure that you go through these standards very clearly and should make sure that everything that is required to be complied with, everything that is required to be done is done in true spirit and true form. I wish you all the very best for the forthcoming audit finalization season. Thank you.